Okay, good evening everyone. Is my voice okay? Okay. So from today onwards, we are going to do two case studies per week on accounts as well. Okay. So this is my first case study for accounts. Okay. And this is on PricewaterhouseCoopers. Okay. So you might have heard that name before, PricewaterhouseCoopers. And do you know what these people sell? PricewaterhouseCoopers, what they are into, which business they are into? Anyone? So it's a MNC, right? And what do they sell? PricewaterhouseCoopers. Yeah, this is the company. What do they sell? This is what I'm asking. That is a multinational company, of course. But what do they sell? What business they are into? Anyone? PwC. No idea? Okay, so let's do about PwC. See, PwC, that is PricewaterhouseCoopers, is four big auditors along with Deloitte, Ernst & Young, and KPMG. So they are auditors. Okay, so they are into tax advisory, consulting, financial advisory, actuarial assurance, all these stuff. Fine. So it's like it's in Big Four. Fine, everyone. So they are like auditors. They audit. Okay. So they are into assurance, tax advisory, consulting, financial advisory, actuarial, and legal. These services are being provided by them. Okay, so is it clear what services is being provided by PricewaterhouseCoopers? Okay, now PricewaterhouseCoopers was created in July 1908 by the merger of two firms, PricewaterhouseCoopers and Lebrand, each with historical roots going back some 150 years and originating in London. PricewaterhouseCoopers, the world's largest professional service organization, helped its clients build value, manage risk, and improve their performance. Drawing onto the talents of more than 14,000 people in 152 countries, it provides a full range of business advisory services, okay, to leading global, national, and local companies and to public institutions. These services include audit, accounting and tax, advice, management. So these services are being provided by them. Fine. Information technology and human resource consulting. Financial advisory services include mergers and acquisitions, business recovery, project finance and litigation support, business process outsourcing services, and legal services through a global network of affiliated law firms. Fine. 5 things you didn't know about PricewaterhouseCoopers. To meet their growth targets, they need to hire 1,000 people a week across the world. They will be the largest professional services firm in critically important emerging markets: Russia and the former Soviet Union, India, China, Singapore, Malaysia, and Latin America. The high technology practices will yield revenues in excess of $1 billion with over 2,500 technology clients. Work with financial services. Clients will represent more than 20% of the PricewaterhouseCoopers international revenue. They are already investing $200 million a year in new technology. Okay, very good evening, Samu. So today we are doing a case study on accounting. We are learning about PricewaterhouseCoopers. You might have heard that name before. So they are like into Big Four. They are basically into auditing services. Okay, like finance services. So they provide a wide range of services. It includes financial advisory and outsourcing, legal services, okay, business recovery, all these stuff. Now, a large-scale global enterprise such as PricewaterhouseCoopers needs a solid infrastructure to meet its clients' expectations. One element is a powerful database developed by PricewaterhouseCoopers that shares best practices information with all its offices around the world. PricewaterhouseCoopers is also harnessing all available technology to ensure any of their advisors can work with their clients anywhere in the world, allowing them to be fully effective in serving the client's needs immediately. They offer businesses around the world both a wider range of services and more integrated services than ever been possible. This services also provides a solution to business problems of a scale and complexity that are greater than even before. Fine. So did you got it what they are into? PricewaterhouseCoopers and what they do exactly? Everyone out there? Mohammed, Ajit, Samu, Sarfaraz, Kelvin, Sandeep, Fatima, Raisa, Darshana, Prabhavati, Pramod, Lakshmi, Satish and Mohammed Shah. Now, what you have to do? From here till boundaries, just read it on your own. Okay, don't change the board, don't move it, and then we are going to proceed ahead to the next part of that. Alright. So just do that, please. Everyone needs to read that. Once you're done with this, just let me know. Done? Once you're done, just let me know, please. Then we are going to switch over to the next page of this. Okay. Now you have to read the remaining parts of it, that is till before. Just read it, please. Once you're done, just write done in the chat box. Okay, fine. Let's move to the second page of this. Okay. Integrated team approach. PricewaterhouseCoopers. Okay. Integrated team approach. Okay. Until recently, professional services were recognized as distinct areas that were separate entities with little room for overlap or sharing the information. Now, the boundaries between activities such as tax, audit and management consultancy are becoming blurred. They provide a fully integrated team to tackle a company's diverse problems. Okay. At PricewaterhouseCoopers, there are 6 services lines or departments which cover different areas of specialization. They will give you all round service in terms of audits, assets, okay, assurance and business advisory services, management consulting services, tax and legal services, financial advisory services, global human resource solution, business process outsourcing. PricewaterhouseCoopers may work on one of these areas and find the client requires help and solutions to issues in other areas. They are able to provide an integrated team of experts to give advice and offer a range of possible solutions. The first and largest of these services lines, like the assurance and business advisory services, is now considered in more depth. Okay. ABAS, assurance and business advisory services. At PricewaterhouseCoopers, the global practice they call ABAS provides a broad range of services which fulfill 3 core business needs. Assurance. Okay. What is assurance? They conduct audits and provide assurance to clients on the financial performance and operations of their businesses. Fine? Clear? Is it clear? Alright. Global risk management solutions. They help clients to manage their business risks and thereby improve financial performance. Transaction services. They offer advice to clients about their significant transactions such as merger and acquisitions activities. Some of the most exciting organizations from the world of banking, commerce and government come to them for advice. The client list is dominated by the household names with particular strengths in communication, financial services, retail, energy and manufacture sectors. Assurance. Assurance is the largest part of UK practice for PricewaterhouseCoopers and generated income from a combination of audits and business advisory assignments. In addition to an audit, many clients require business advisory services. For example, they may provide advice on joint ventures or mergers, okay, helping companies to float their company on the stock exchange or assess whether the technology systems in place provide an accurate means of reporting the financial data. We are very good in this example. So today we are doing a case study on accounting, and the name of the company on which we are doing a case study is PricewaterhouseCoopers. Okay, so they are into advisory, taxation, okay, and they provide a wide range of services. Now you have to read it from, I'll just mark it with a pen, okay. Assurance till reporting D. Fine, and don't move it, please. Fine. Hi Lakshmi. Hi Nishan. So today we are doing a case study on accounting. You people have joined late, so let me enlighten you on that. PricewaterhouseCoopers is the name of the company. They are into audits, taxation, okay, and wide range of services. They provide financial advisory. So this is the second page of the same. Once you are done, just let me know. Okay, done. Fine. Let's go to the next page of this. Yeah. Now, auditing. Let me enlighten you on auditing part then. Yeah. Importance of accounting standards. Price House Potter Cooper's case study. Okay. So in order that shareholders, just a second, please. Okay. In order that shareholders and other interested parties can make informed judgment as to the financial health of a company, it is legal requirement that all companies have their financial facts and figures checked. There might be loopholes in that, right? This is known as audit and must be performed by an independent registered firm of auditors, right? The auditors use guidance from the Accounting Standards Board to state whether, in their opinion, the financial information presented by the company is true and fair representation of that company's financial health, right? The primary reporting responsibility of the auditor is, however, to the shareholders, not to the company directors. Okay? Fine, everyone? Okay. It is interesting to note the differences between true and fair and 100% accurate. It is not the role of the auditors to check every individual transaction performed by a company, and therefore the auditors cannot state that the figures are 100% correct, merely that in their opinion they are true and fair. Okay? Legislations and regulation of companies. The accounts of a company are designed to show both the performance and its current financial position. All the company accounts in this country need to be produced in accordance with the Companies Act 1985 and accounting standards. Okay. Now, what information should be included in a company's account? How this information should be presented? The Companies Act decrees that company must produce accounts for publication. Okay. The Accounting Standards Committee devised SSAPs. In 1991, the committee was replaced by the Auditing Standard Board, which developed FRS. The board is gradually replacing SSARs with FRS, which are issued when board identifies a need. These two set of standards encourage greater clarity so that reader can fully understand the information represented. Fine? Okay. Now, so you just read it from, you have to read it from here, page 3. They are presented. Don't move it. Who is moving that? Please don't move it. Please read it. Then I'll enlighten you on SSAP accounting standards. Okay. What is the known? What is not being needed, Prabhavati? But you should understand. See, just read it so that if you have missed out something you were not able to understand while I was teaching, you can ask me again in that case. Fine. And this is going to improve your reading standards too, right? This is going to make your reading more efficient. You'll grow good in reading. And while reading, you can absorb, your mind can absorb many words. So this is going to improve your vocabulary too. Yeah. Now read it from Companies Act decrees till here. Fine. Sit. Okay. Now let's learn about SSAP. Now, what is SSAP? Accounting. Common standards of accounting reporting enable accurate comparison between companies. Okay, SSAP, that is Statement of Standard Accounting Practice, are edicts by which trading companies that are listed on the stock market must adhere to when constructing their financial reports. They form part of the Generally Accepted Accounting Practice or GAAP, which is statutory in the United Kingdom through tax acts. Okay, so see, SSAPs were issued until 1919. The regulatory body responsible for generating them was called the Accounting Standards Committee. This organization was superseded by the Accounting Standards Board, one of the arms of the Financial Reporting Council. Okay, so basically what they do, let me enlighten you on that. Okay, what is like SSAP? What standards they adapt? Okay. So do you have any idea about SSAP? Yes or no? So what is SSAP? What do you know about it? Yeah, no idea. Someone has raised his or her hand. Who is the one? Okay, yes, Nishant, tell me, what is the issue? Okay. Okay, so I'm going to tell you what is this SSAP. Yes, Nishant, what is the issue? Yes, correct, Pramati. Yes, Nishant, what is the issue? See, let me tell you about SSAP in detail. Nishant, you are saying something. Please let me know in the chat box. Now, see, the statutory acting principles working group is responsible for developing and adopting substantive and non-substantive revisions to the statement of statutory accounting principles. Statutory accounting principles provide the basis for insurers, okay, to prepare financial statements for financial regulation purposes. Okay, substantive statutory accounting revisions introduced. So, what they do exactly? Yes, Nishant, what is the issue? You're facing any issues, that's why you have raised the hand? Okay, okay, fine. Okay, let's proceed ahead. Okay. See, when it comes to SSAP, it gives guidance on accounting treatment of both stocks and long-term contracts. Okay, the determination of profit for an accounting period involves the allocation of costs to reporting period. So this is like a standard which has to be followed. That is what I can say in simple language. Okay. Yeah. Now, let's switch back to what we were doing. Okay, so this much is clear, right? Now, accounting standards and cash flow statements. This is what we're going to do under this. Okay. So, are you able to see the board properly, everyone out there? Now, several of the SSAPs and FRAs are detailed in the context of fictional oil companies. Further, FRAs are expected as business becomes more complex. How these different standards are applied varies with the type of business conducted by a company. Fine. As for my company, the shareholders' interest must be protected. The following examples of SSAPs and FRAs demonstrate the consideration that must be given in drawing up financial accounts in order that interested individuals such as financial analysts can clearly judge a company's performance and position. Fine. Key standards will be considered in this and in the following section. SSAP, accounting for depreciation. Companies invest in assets such as machinery, right, in order to produce goods or services to sell. These are known as fixed assets, right? I think I have told you this thing. Fixed assets. Whatever money they are employing, to produce goods or services to sell. They need to invest in machinery and other stuff to produce some goods. So that would be a fixed asset, right? Right or not? In the case of gas or oil industry, an oil rig is a fixed asset. The company must own an oil rig to supply oil or gas. All companies have some form of fixed assets, although the dependence on these assets vary with the type of business. Yeah. Another example could be machinery for manufacturing a car or building in which employees work. In this example, Global Oil has built an oil rig for pounds. In its balance sheet, cash will be reduced by 50 M and fixed assets will increase by 50 M. Fine? Yeah. In 20 years' time, the economic life, the company knows that oil rig will need to be replaced. By the 20th year, the value of the oil rig in the company's balance sheet will be 0. Fine? Thus, the value of oil rig will reduce each year by a set amount of 2.5 M pounds in this example. This is known as depreciation, and annual depreciation figure is shown in the profit and loss account. Is it clear? Any questions? SSAPs state that economic life of a fixed asset should be reviewed regularly and should be stated in the notes to the accounts together with how the rate of depreciation was determined. Okay. FRS 11, impairment of fixed assets and goodwill. FRS 11 is a new standard and deals with any loss in value to a fixed asset, for example, through damage or downtime in the economy. This is known as impairment. For example, if the pipeline from Global Oil rig is damaged, the supply of oil or gas is reduced or stopped until repairs are being made. Thus, the ability of the oil rig to produce oil or gas is less than expected and fixed asset value is reduced. So that is impairment. Global Oil must therefore make a general reduction in the value of the asset and charge the loss to the profit and loss account. Fine. FRS 11 states that all companies must reassess the value of their fixed asset on a regular basis to establish whether the figure in the balance sheet is a fair value. Clear? Is it clear? There are three main statements in a company's annual report and accounting: the profit and loss account, the balance sheet, and the cash flow statement. Right? For example, when Global Oil may be highly profitable without any cash, it will be unable to pay its employees or suppliers. Clearly, when Global Oil sells oil to its customer, it needs to ensure it receives prompt payment. Cash is the lifeblood of a business, and it is therefore important for a company to issue a cash flow statement. FRS sets out the format and contents of a company's cash flow statement. Fine? So see, in financial accounting, a cash flow statement, also known as a statement of cash flows, is a financial statement that shows how changes in the balance sheet, accounts, and income affect cash and cash equivalents. Right? I'll just show it to you. Wait. So what is a cash flow statement? What is a cash flow statement in simple language? So cash flow in and out of business, right? Yeah, yeah. See, the statement of cash flow is a part of financial statement issued by a business and describes that cash flows into and out of business. Its particular focus is on the types of activities that create and use cash. Okay? So the statement of cash flows is generally considered less critical than the income statement and balance sheet. It can be used to discern trends in the business performance that are not readily apparent in the rest of the financial statement. Okay? So cash flow in and out of the company. Now, yes, I'm just giving you one PDF. One video. Just kindly see that. Okay. So the video is being pasted here. Just open this and see it. Fine, everyone. Just play it at your end. Is it clear? Fine. Just open it at your end and see it. Are you done with it? Everyone out there? Is everyone done with it? Please let me know in the chat box so that we can proceed ahead. Okay. Now you have to read this page and then we're going to proceed ahead with the next one. Okay. Okay. So from several till goodwill. Fine, everyone? You can see the video at home, I guess. Don't move the page, please. Or if you want to see it here, that's okay. I don't have any doubts about it. It's up to you. You decide what. So what do you want to do? You want to see the video first and then you want to read it, or you want me to you want to read it first and then you want to continue with the video at home? Which one you would prefer? Please let me know in the chat box. Yes. So just see the video properly. Okay. Just see it now. And then you can read it. And I'm not going to finish the case study today. Tomorrow we would be able to finish it because I don't want to be in a hurry. Okay. It's not my only goal to finish it. It's not like I'm teaching here for the sake of teaching. You should follow as well. So just see that video. No issues. Take your time. Okay. Is everyone done with it? Yeah, done? Fine. Now you have to read this from FRS till cash flow statement. Okay, just read it. Okay, so you have to read it from FRS till statement, and once you are done, just type yeah, I'm done. Okay, okay. So that's it for today. We are going to do the remaining parts of this in the next class itself. Okay. Do you have any questions for me? Anyone out there? Okay. So thank you so much. Don't forget to fill the feedback form, which is, and just put genuine comments there. We are going to continue with this in the next class itself. Okay. I'll be teaching you case studies on accounting. Okay, Prabhavati. Yeah. Okay. Thank you so much. Take care. Bye.